Greetings, members one and all of the Salivation Nation. Are gold and silver ready to explode yet? Let's explore! We're going to answer that question by taking a look at different aspects of the market that affect the prices of gold and silver. And in this article here from Seeking Alpha, in the summary, it mentions how there's a lot of volatility in gold and especially silver. It's trying to resolve the political, health, and economic crisis that we're dealing with these days. There's unrest will continue to cause volatility in the markets, including gold, but I think most of that is over. There's chatter now, but essentially there is still some political concerns that have kind of overtaken the pandemic right now, even though we're seeing some numbers increase in that area. The pandemic is obviously having an effect on the economy and health for citizens really around the world. So the fundamentals are, one of the article here is that this volatility that we're seeing here is kind of exacerbated to some extent by what's going on with politics recently. Although what happened to the Capitol really didn't have that big of an effect. It mentions here that there's unrest and there's volatility. There's some chatter about what could be coming for the inauguration, but we've not really seen that pan out a whole lot yet. And it's not affected gold and silver prices too much to the upside. In fact, we can see now here as of the recording of this video that it is down. Gold and silver both down, and they're down significantly, for such a time as this. I mean, not a whole lot today, but over the past couple of days. I've actually warned about that in a prior video that we could see falling prices at the beginning of 2021, and here we are. And I believe that after the inauguration, we'll probably see even more of a leveling out in that area. But there are still concerns, for sure. And there's a little bit of activity that's been happening in terms of the stocks. The job numbers have not come in as well as some had hoped. Global economic data was bearish for gold, with the Eurozone November industrial production rising 2.5% month to month, which was stronger than expected and the largest increase in 4 months. In Japan, the December machine tool orders number increased 8.7% year to year, which was the biggest increase in two and a quarter years. So things like that are going to push back the other way. And an interview, or what Fed president from the St. Louis Federal Reserve said, that the Fed must regain credibility that hit its 2% inflation target, and we're going to be less preemptive when we could have been or would have been in previous decades, and we are going to let inflation go over target. His statements helped boost gold prices. In fact, remember that their target now is about 2.5%. European Central Bank Governing Council member Villeroy de Gallo further supports precious metal prices when he said that the bank remains clearly committed to its 2% inflation target. To achieve this, we will maintain favorable monetary conditions for as long as necessary. So again, these central banks, they're going to do everything they can to keep inflation staved off for a bit. But what happens? All that money gets printed and then parked. Money gets printed and parked, giving people the illusion of stability and that it's there. But as soon as that money hits the economy and circulates in the economy, that's where you're going to see pressures build up for inflation and potentially even hyperinflation. And I think that's probably what they're getting at here. The U.S. consumer price data showed weak price pressures, which will depress gold demand as a hedge against inflation. The U.S. December CPI ex-food and energy rose 0.1% month to month and 1.6% year to year, which met expectations. But the worsening pandemic does support gold, which leads to dovish central bank policies. But at the same time, lockdowns hurt economic growth and demand for industrial metals such as silver. The U.S. reported a record 4,610 COVID-19 deaths yesterday on Tuesday. In the UK on Wednesday reported a record 3,363 people on ventilators. Japan expanded its state emergency beyond Tokyo region to 7 more prefectures, which means half the economy is under lockdown. In the world, infections have risen above 92 million and deaths have almost reached 2 million. And then we have the incoming Democratic-controlled Congress is expected to increase stimulus measures. That's going to be more printing of dollars and money going out, and probably likely more regulation in that regard, and that's going to bode well for gold and silver in the long term. Maybe not, though, for the short term. But does this translate to an explosion of gold and silver prices? Not necessarily, at least not yet. And it may take a while. You know, again, people were thinking after the last financial crisis that any day, myself included, thinking, okay, well, gold and silver is going to probably skyrocket soon. We've had 3 rounds of quantitative easing now, and something's got to give. Well, we're now in the 4th round and into infinity with it. And it's been into hyperdrive over the past year. And my guess is that's not going to slow down as we move into the following, into the 2021 and move in further into this year. And, you know, there's technical analysis that talks about this as well, too. But nothing really tells us in this article about what leading up to this, except for this part here about how we saw gold go up to $2,089. And probably that's safe to say that that was an explosion in 2020. The market has been waiting to see how much damage has been done to the economy. Traders thought there would be far more damage, and the market came down with gold prices at $1,767 last year, November the 30th, which was a low for 2020. The leg from 1767 to 1962 is almost a $200 move since November the 30th, and this is just the beginning of volatility in the gold market. And this is where they say that it's about to explode. It did see a pullback, as we talked about, with this 50% Fibonacci correction. It looks like a second Elliott wave correction. You get into technical analysis there too, which I have great respect for, but I think there's a lot of other factors that play in, which is why no one can really predict the average. But it's saying that there the first move was $200, and then the third wave were to be about $400 from the low of 1817. It should hit $2,217. If that fits into the upper range of the long-term Fibonacci trend line's resistance, all the way up to $2,863. So there's a lot of things that say that this could happen based off of that, but I believe there's other factors that could mitigate some of that movement. And then that's just for gold. And what about silver? Silver tends to move in exaggerated amounts above and below gold's price movement. You know, I have been bullish on both gold and silver into 2021, but I don't necessarily think that they will necessarily explode. To me, an explosion means I must break record levels. And for me to break a record level, it would have to be based off of the an inflation-adjusted dollars. In other words, real dollar movements to what the dollar means now, which means that gold would have to hit probably in that area of $2,217 for it to get up to where its previous record was in 2011. At over $1,800 back then, maybe 1921, I've heard for a brief amount of time, but the average for that period is around that, is really equivalent to about, you know, over almost $2,300 today. And those numbers are probably off too, because again, how you measuring inflation and the like. But silver has got a long way to go, and it would really have to radically outperform gold in order for it to explode in that manner. But we'll see. It's you know, the article says here, I think this the sentence maybe says most of it. The market is in a choppy area. Well, what happens in choppy waters? You have very quick moments of water that's a little bit lower and then water that's higher. in a rough, violent manner. And silver, especially, is much more choppy as it reacts to markets than gold. However, and as is the case, we will continue to watch and understand that silver's probably going to do well no matter what happens, because if the economy improves and does better, well, there's going to be more money put into silver for some of the initiatives that Democrats want in with green energy and the like. And so there already is an increased usage of silver in photovoltaics and the like anyway, just because of the free market. But they're going to want to probably amp that up a considerable amount if they get their way. And I believe that even as such, there'll be other uses for silver in electronics that will increase if the economy does recover. If it does not, then we will see gold rise, and we will see silver rise along with it, probably at a faster pace to a degree, and then that will narrow the ratio, but probably not as much as it would if it would be the alternative. In other words, a growing economy and a rising silver price, but not necessarily so much of a rising gold price. But again, I could be wrong. But in either of those incidences, I don't see an explosion of prices. And that's kind of how I'm defining what an explosion is. So we'll see how it plays out, but interesting indeed. And obviously, when you see anything like this, it gets you excited thinking we're just on the cusp of it. But I want to caution that mode of thinking, because you never know. Many people have been burned time and time again thinking that silver is going to go to the moon or even into the stratosphere. And my feeling is that you look at it through a long-term movement. Same thing with gold, but lesser so, because gold is more stable. It is the ultimate stable safe haven out there of all the precious metals, hands down. And so that's why I've changed my strategy in 2017 and continue to do that into this year with trying to accumulate more gold. But I'm not anti-silver. I just think we have to be cautious in our holdings and understand that when you do buy, you buy with the understanding that the price could drop. But likely, if you buy gold, it's going to happen much less of a rate than silver. But still, you hold silver, you buy it, and you hold it long enough, you'll eventually break even. And that's the best thing we can hope for, and that's its purpose. So there you have it. Let me know your thoughts in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.